We're going live again to look at the markets. It's a sunny day in Belgium, around 33 degrees, very hot. So I'm gonna go live for just a few minutes, like 20 minutes, 30 minutes, we'll see. Thanks for joining El Surfer, Miha, Brian, David, Ted, Jack, Jimmy, Emmanuel, Delfinio, thanks for joining. If you have questions about the current market move or any stock, any crypto you want me to check out, do let me know in the chat. And I'm here just gonna rant a little bit about what we're seeing here in the stock market. So I have TradingView open where we can see the price chart of the stock market futures. It's now currently down 1.2% on the day. The Nasdaq is down over 2%, if I'm not mistaken, 2.5%. So tech stocks are having a beaten today. We have Micron releasing earnings this week. Is down around -9, almost 10%. So big moves on especially the semiconductors. It's something that we have discussed in the past. They have been rallying strongs and they are moving with high volatility. So it's something you should expect if you're trading these semiconductors. Let's have a look at Bitcoin. We're gonna deep dive into it a little bit more later on, but I'm just looking at how that's the price is doing. So Bitcoin minus 2.5%, just like the Nasdaq, of course, way lower from its all-time high compared to the Nasdaq, which is down maybe 3-4% from its all-time high. Bitcoin, let's see how much it's down, around 50% from its all-time high. You know, I'm a big Bitcoin bull. I've been pro Bitcoin since I started the Panic Drop newsletter. So always talking about I'm gonna close the mic a little bit if you can hear me better. So always talking about Bitcoin because over time, if you look at the long-term chart, we know it's going to make new all-time highs. So it's basically a bet on the fact that crypto will continue its path higher. So it's moving in cycles, of course, where it has these big bull markets for 2-3 years, and then we see a massive crash every time over and over again. So with the Panic Drop newsletter, I try to distill it into showing you how these cycles work. Let me check to get the 4 cycle view here. Yeah. So it's clearly showing you how these cycles work. You have 3 years up and then one big down year, and we're currently in this big down year. I've been saying this ever since we broke $110,000. I said it's time to get more cautious, and I went out of Bitcoin, or at least most of my Bitcoin, when we broke 100K. And this was in line with the 50-week moving average here. And now we're still trading below it. So nothing has changed until we can get above that moving average, or until we are here nearing the end of the bear phase, which is projected to be around October 2026. So That's around 3 to 4 months left of bear price action. And I do expect that it's either gonna be, in the bullish case, choppy sideways, or another leg down, marking the low somewhere in October. So yeah, that's that's what you should be mentally prepared for, because it's really the normal thing to happen for Bitcoin at this this pace. Let me check if there's any questions. Um, Alina, thanks for joining. And then Small Fry, Ryan, uh, Caroline, thanks for being here. We were just talking about how the crypto cycle would unfold. I'm not sure if you guys are here for crypto or for stocks, but my portfolio is mainly stocks, and it's funny because I mostly talk about Bitcoin just because I'm more passionate about this 4 year cycle and how the crypto space works. But actually, I hold 80% of my portfolio into stocks, even ETFs, just because over time these are more like the less risky bets in my opinion. We have a few names of stocks that I always watch. One of them, my currently biggest position in the portfolio, is Nvidia. So Nvidia is actually, based on my calculations, undervalued, and that's because they have a lot of growth coming based on what the analysts say. So the projected growth is very high, their earnings is very high, but the price is stalling. If you compare this with AMD, Micron, I think Nvidia has been a bit of a disappointment this year. But of course, look where we come from. We come from, yeah, in 2022, it was trading at 13 before the stock split, of course, but it was trading at $13, even lower. Now we're sitting at 200, so more than a 10x. You should expect this price to be absorbed first, so it needs some time to reset sentiment. We went extreme to the bullish side, and now it's time to, yeah, get some boring price action usually, um, to lose all the people that are looking always for the shiny objects. They're looking now at AMD, they're looking at Micron, they're saying it's going up every week, every month, so I'm gonna put my money from Nvidia, I'm gonna put it in Micron. But basically, that's not how I invest. I usually invest when things are going down. Just to counter that, there is one thing I just added in my portfolio, and this is not financial advice, but I was looking at the biotech sector breaking out, and it it is a sector that is highly volatile as well. But you can see over time it goes up as well. So my bet is that the bio sector is in a strong position to outperform the stock market, in the short term at least. So looking good here for the bio sector. If it's getting oversold, we can look at the RSI or stochastics, for example. Then it might be time to move out. So right now there is still some room left, um, to get more higher prices. So this is just a trade I have. The monthly is looking pretty high indeed. So this is gonna be a short term trade, just looking for a breakout. Sometimes a stock or an ETF does really well at extended um, RSI or overbought levels. So it's not a reason to sell, but just to stay cautious and get out when the trend changes. For example, if we go on the weekly chart, I usually drop the 8 exponential moving average, and I want to see it hold that exponential level. So I'm going to remove one, the 50. So the 8 exponential moving average, it's trading basically this moving average on the weekly chart, so on the weekly time frame. And when I see it's breaking down, then I will cut the position. If it gets above it again, then I will enter, just following this trend line. But full disclosure, this is just a small position in my portfolio, less than 2%. And I usually have positions maximum around 5%. The only stocks I own that are above 5% are the stock vault stocks that I cover every month. One of them is, of course, Nvidia, but another one we saw dropping a lot recently was Google yesterday. So Google dropped around 5% yesterday. I'm not sure how it's doing today. Let me check. So it's up actually 40, so 0.40% up on the day. Um it was down because there was some AI expert going to Anthropic, and we had another AI expert from Google going to OpenAI. So they're seeing a lot of people leave, and this brings some fear about where Google is heading within the AI narrative. Now, you have to understand Google is more than an AI company. It has a lot of revenue in ad spending. It has a lot of revenue in other subscriptions like YouTube. So I don't think these two people leaving will change the fundamentals. So for me personally, this is a buy the dip opportunity. I think, um, yeah, as it's going to consolidate as well with such a move it had, is going to be, a an opportunity in the long term. And I did saw some stats where you basically saw the Max 7 stocks being down for the year. So if you check all the Max 7 stocks, I'm guessing the ETF here covering the Max 7 stocks. This year is actually a down year, so 12 months. Yeah, you can see the Max 7 stocks all together. So Amazon, Meta, uh, we have Google, we have Apple, Nvidia. So all these stocks together are down this year 3%. Of course, Microsoft is down even more. We have Nvidia and Google dragging the stocks higher, but it's very unusual to have the Max 7 stocks down for the year. They are usually leading the market. So that's why I say it's an opportunity to buy these stocks. We rarely see the Max 7 stocks negative for the year. So whenever it's negative, in my opinion, that's a buy. It went down around March this year with the Iranian war, and it went down in April last year with the tariff war. And you can see how fast the recovery was each time. And every dip basically is a buying opportunity, in my honest opinion. No financial advice, of course. I would also still be buying the S&P 500, the Nasdaq. June is usually a more bearish months, and we're also heading into Q3 of the midterm year, which is also the more bearish period of the midterm year. So we should expect some volatility. We should be mentally prepared, but overall, I am bullish on where it will end. So the midterm election day is somewhere also in November. And what statistics are saying is that the uh, stock index, so I'm talking about the S&P 500, usually has a really bullish phase once we are past that midterm election day. So that means make sure you have enough cash to buy stocks, crypto, gold, even. Um, for that time frame, because after that it's usually a bullish. Now, I'm not saying to buy any stock. You have to either buy the index or the stocks that have high earnings, a wide mode, low debt. So usually the mega caps, max 7 stocks, but I have also another list that I like. For example, um, I'm buying a lot of Mastercard. It's a nice stock to have that's continuing to do good. But we also have Service now that's really strong as well. I just wanted to show you gold. So here is gold. I exited this position um, because it went parabolic, and now I'm thinking to add again as we come closer as well to that October time frame in 2026. I'm not saying it's going all the way to 3,500, but for gold, I'm remaining patient. I'm just gonna, yeah, uh, enter and look at the time frame. For Bitcoin, it's a little bit different. Just because I am very bullish on Bitcoin, I do hold a lot of Bitcoin in my eToro portfolio. It's currently around 9%, but I am anticipating to buy more as we enter that October time frame as well. Isaac, thanks for joining. David, Ellie, nice of you uh, being here. I think if any of you are holding these semiconductor stocks, you should understand that yes, um, fundamentals are strong, but the price seems a little bit parabolic. So I wouldn't say sell your position, but try to understand that most people holding Micron, those are traders or algo portfolios that basically look for momentum, and once the momentum is gone, they will get out. And for example, Micron has earnings this week, but let's say they are still beating, but the forward projection is lower than the analysts anticipate. Then that's a sign the price could um, yeah go down, even though earnings and revenue is going up. Now, I personally think they're gonna have a massive beat. We already saw other semiconductors having a massive beat, like Broadcom and Nvidia, of course, but the price didn't move that much. So we'll see how Micron is gonna do. So Broadcom is one of my second favorites. Let's say you can see it's still trading near all-time highs. So definitely a good stock to hold. ASML, another favorite of mine. It's down 6% today, but still doing like a dip in an uptrend, in my opinion. So if you're trading, you can just watch the trend. Of course, if you're investing, you should be entering at levels where the price is not so overbought. So there's two ways to do that. You can either watch moving averages, as I said before, you plot in a a moving average. For example, let's say you're looking at the 200 moving average, it's trading well above it. It can have a test going up. But once it's breaking this moving average, you can always go out. But I prefer to hold my stocks for the long term. Once I buy, I try not to sell. Um, and instead of um, selling that allocation, let's say it's 5% allocation, what I can do is buy with another trade around the core position that I have. So let's say I have 5% of ASML in my portfolio, but I still have 5% cash in my portfolio. Then today would be a day to buy ASML with 1% of my portfolio. And then I would place a take profit at a 1% gain. And if you did that today, let's say you bought at the open, then you would already be out. So it's already up 1.3%. So those are like trades gaining 1% every time, but you have to do it 10, 20 times a day, and those trades add up. Okay, so that gives you cash over time to buy more stocks at lower prices. If you're just buy and hold, that's fine. You should be allocated and predefine how much that allocation should be for your portfolio per stock. Or simply buy the index, because honestly, I think most of the investors out there are better off just buying the index, the S&P 500 or the Nasdaq. And I also buy the Nasdaq, so I've been buying the Nasdaq when it was dropping. And the goal is because I like tech stocks, and I think tech stocks are currently the leaders of the space. So obviously, tech stocks are going to outperform the S&P 500, but it's hard to pick the winners. So that's why indexes are the way to go. So you can see, um, starting this year, we have the Nasdaq up 16% and the S&P 500 up 8%. So if it's going down, Nasdaq will go down more. But if it's going up, you will have tech stock going up way more. So I am fully allocated into tech stocks and crypto. To be honest, that's what I like. Let's look at some altcoins. Um, Hype was the one doing really well just a few weeks ago. Let me take another. I want the full price history. No, let's go to trades. Yeah. So Hype, really nice price action, outperformed Bitcoin, was one of the few, is one of the coins that I've been covering for weeks now in the Panic Drop newsletter. And it's sitting somewhere at $64. So that's the level I want to see hold for a bounce, or the next level, if I enter this trade, I want to place a stop loss, and the next level I enter would be at 54. Of course, you can also enter at a breakout. Let's say it's breaking above this 64 level again without touching 54. You can take a breakout trade and enter hype. Hype is really strong. So as long as this momentum is going, I think it's a solid pick in the portfolio. One of the stocks that we are um, seeing having a lot of hype on X is ServiceNow. And ServiceNow is a strong company, um, software company that is beaten down due to the AI fear that it's going to disrupt. But each time when they release earnings, it's showing it's even earning more thanks to AI. They're using AI agents to work faster, more efficient, and make more money and do it for their customers. So this is actually a AI company, in my opinion. But we are profiting from the down move, of course. So if things are going down and nobody likes it, that's when I start to like it, and uh, I will be adding it in my portfolio. But I understand I will be underwater, so I will be negative for a while until the price recovers. One example is, for example, Palo Alto. Palo Alto, I was buying basically from 2024 to the 2025. Every dip I was buying. And then we had a massive crash in the beginning of the year. And yeah, I was buying. And now finally the stock price is catching up to the fundamentals of the company. I'm not buying today anymore because it's shooting up, but I am holding my position, and that's what I want to hold for the long term. Eventually, I think we will see higher prices because cybersecurity is going to be a a sector where I see massive growth, especially with AI. Um, a lot more hacks going on and a lot more phishing going on. So we want to protect ourselves, and Palo Alto is gonna be the company that's driving the most revenue out of this. So just holding this for the long term, and this trade or investment has played out very nicely. So, guys, no questions, but thanks for joining. I just wanted to quickly cover the market. Of course, the question was why is the market crashing? Honestly, I think it's just because we are overextended and we are entering this more bearish phase of the midterm year. So Q3 is usually bearish, but be ready to buy, be in buying modus all the time because we will see higher prices in the S&P, in the Nasdaq, in these mega caps, and eventually also in crypto, of course. And it's all gonna be October, November 2026. So remember that, have cash, and stay patient until then, of course. Right, guys? Thanks for joining, and see you next time.